Well, hello everybody. It is November 22nd. It's the weekly review where we take a look at what happened, what we expect to take place in the coming days and weeks, and how, of course, to try and position for that. As far as last week, it was a very positive week. If you remember, we had positioned long into the week, coming off that retrace. And you got a nice big spike up, across the board here, 3.5%, 2.5% on the Russell. Russell still lagging, still down on the year. Nasdaq, of course, is the leader. S&P, Dow, basically flat on the year, so nothing there. As far as the way those charts looked, if we pop up and look at those charts, S&P had pulled back. We had talked about that. Pullback as being the opportunity to buy. It was doing a bullish retest regen right here off that prior swing point high. And of course the primary bullish retest regen that we were looking at was over here on the NASDAQ. And that NASDAQ, this was the first pullback on the NASDAQ after more than 6 bars as we went across here. So that set up the high probability, right, that would at least get some sort of a bounce, but potentially could start to regenerate back to the top side. And of course, this ended up being a regeneration with no give back. We actually had the setup here on Friday, on Thursday's close, this close here, we had the setup across the board for these markets to try and pull back. Didn't pull back, pushed on higher, and a lot of that was due, of course, to Draghi coming out with his speech and saying, hey, we're going to QE ourselves to infinity just like others have done, and the markets just pulled higher as a result. And if you pull over and look at the DAX, you can see it on the DAX. DAX tried to pull back. Top here was at 11.055. They come back to 11.049, so they test in, retest, regen, spike back up, does a doji, not a lot of volume. Volume was light as it came back in here. So, the DAX says, hey, I can even go higher. Still, if you look at it on the weekly, the DAX is testing into the top of its breakdown bar. Just got over it on Friday, so we'll see if it can hang over it this week and push higher. So if you look at everything, on a quick review, you almost had complete takeaway bars. If we come back over to the S&P 500, put it on a weekly, almost a complete takeaway bar on the weekly. The Russell still looks like it holds the keys as to whether we're going to get any rotation or not. If we pop over and look at the Russell, right, the Russell comes up to the top of this breakdown bar, also the top of this 1028 bar, and the bottom of the swing point low. So if you look at all of these, right, throw them up there and just draw the line across, if I can draw it in there fairly accurately, you kind of have this area here, the area, well, actually, let me get it in there better. I'll just draw it with this because it's easier. You have this area right here is the key area, right? The Russell's coming right into it. And what, of course, that's doing is what we just talked about. It's this bar, and that bar. So as you come into them, this is the key resistance. If you get over this, you're going to attack the swing point high, and you're going to try to push on up on the Russell, right, on the other time frame, the weekly time frame, which is this swing point high. Try to get back over that and then attack that breakdown bar, which is at 1225. So, I don't know that we can assume the Russell's going to do what it needs to. I think the Russell is the one we need to be watching. What happened last week to drive this? Well, it's central banks again. It's been that way forever. China eases interest rates again on business loans, primarily with kind of a LTRO type of lending facility interest rate reduction, similar to what Europe had. ECB underscores that they're going to do whatever they need to do to force inflation rates higher. And of course, that means they're going to QE themselves to infinity. At this juncture, we have a huge range with a bullish technical bias. And you got the seasonal bias. And when I say a huge bullish or a huge range, what I'm talking about, of course, is this range that's been in effect now for a very long time You had the initial, and I'm on the weekly here, you had the initial range, which was essentially up here, right? Actually, if I draw it correctly, let me get the eraser here. You had that bullish range, if you remember, that took place. Let's clean this up and start over. That took place for about 6 months up there, right? And that range was in this top half or top third, then the one underneath it, right? And then, of course, the breakdown area back underneath that. If you look at it now, we're halfway up. We're going to attack this bearish, not the bearish, but is the breakdown bar. We're going to try to attack that again this week. It's Thanksgiving week. It's seasonally very positive this week, and actually positive into the end of the year now. We're in the best, sweetest part of the bullish type scenario that you could want. You've already got, a nice big move off this bottom, the retrace that one would expect, and now the idea that this thing's going to try to break out and go higher. That's going to be a tough order. Russell is the one to watch. This one is the one to watch on the 2103 number. You get over 2103, you're going to attack the highs. So if you look at it in a quick review, that's the way it looks to me. Positives, those takeaway bars. You got this nested ABCD structures now with the one we just saw on the weekly, and the potential for one to set up here with any kind of small retrace to start this week. If we're going to get a pullback this week, I suspect it's going to be right off the top here Monday or Tuesday, because once you get, think about this week, it's Thanksgiving, right? Once you get past Tuesday, it's so seasonally biased to the upside, you're probably not going to see any kind of pullback. There's going to be no volume on Wednesday, no volume on on Friday. It's a half day, you're off Thursday. So that part of the year almost always tends to see larger moves to the upside, or a bias to the upside, I should say. And so any kind of pullback, you got a bunch of numbers coming out Monday and Tuesday. Any kind of pullback, I suspect, will be there. And we'll see if we get a little small nested ABCD structure to get us over this, to get us over that breakdown bar on the weekly time frame as well. So that's the way that looks. Industrial sector rotation, but it's the only place where we're seeing it. Let me pop over there. And it's here that you can see, on that sector, breakout on Friday. This thing is going to try to push higher. It gets a change of trend on the weekly as well. And that's significant because if we come over to qualified trends, you have three of them now. You have technology, discretionary, and now you've got the industrials. Usually 2 to 3 of these start to change, then the rest of them are going to try to follow. If that's the case, folks, we're going to see this thing try to push even higher as a result. And so to me, that's a big number coming off the industrial sector for it to turn positive like that. Third one now on the weekly time frame. The consumer and the discretionary, consumer discretionary technology still seems to be getting the bulk of the money. And you've also got the positives in Europe. And what's negative? It's the rotation. There's no rotation. And then the other thing that's negative, or could become even more negative, is, of course, the strong dollar. With Draghi's comments, of course, on Friday, you saw this thing shoot back up. It's up in this little range. This is after a nice big run. If you look at it on the weekly, it's heading up to test these highs. Because it's still in the range, right? Because the dollar hasn't broken out of the range, it really hasn't created that anxiety that you typically see take place, right? As this thing breaks to new highs. People get used to things, right? And they're used to the dollar in this trading range. What they're not used to is the fact that now the dollar has actually broken over these highs. You hadn't traded very much yet. At this point, you hadn't traded very much over this area. It was just a few bars over here on the weeklies. But now you're coming back up. You're going to test these highs and try to break it out eventually. The dollar is going to be a problem, as we've seen in various earnings reports over the years, the last year and a half. It's a headwind, right, whenever it starts to gallop forward, which has been the case prior and probably will be the case here in the future. Fundamentally, it's the same as it has been. Central bankers, what else is there to say about it? I mean, they are always on the front page, always pushing these markets to the top side. At least so far, they can do no wrong. Negatives, you got all these geopolitical issues everywhere. They're all over the place. And so, one of these at some point potentially could become an issue. I think what's probably going to become an issue for the market is going to be the dollar-denominated debt in emerging markets and the continued pressure that's putting on commodities in emerging markets. So the deflationary forces, of course, is what I'm talking about, and we'll see if that actually is able to arrest this move here at some point. Most economic reports continue to show, moderate, slow, in some cases decelerating growth. It's not at the point where recession is like on our heels, but if you look across the world, most of the world is really struggling to show any growth whatsoever, and of course that is not a positive from a fundamental standpoint. What to watch for? Last week we were looking to see how fast that Paris attack would be bought. It was bought right away. They didn't even wait. It was bought the very next morning. And then the other question last week, and that wasn't surprising. It's kind of what we thought would happen. And the other case was, would we get that bullish retest regen? That's about a 91, 92%er. Yeah, odds heavily favored it, and that's exactly what we got. Of course, as you know, we tried to position long into that pullback, thinking that, in fact, this would take place. What do we think is going to happen this week? Well, it's seasonally favorable this week with Thanksgiving. Question is will the NASDAQ make new highs? Are we going to see that push and new highs on the NASDAQ to see the NASDAQ join the NDX at new highs? Here's the NDX, that swing point high, just got over it there. It's coming back after it, takeaway bar last week. If you move over and you look at the broader NASDAQ composite, right, that's where the key is going to be is it had already gotten over this breakdown bar 2 weeks prior. Can it get back up and attack the swing point high and capture a new high? I think that's a possibility. I think that's the target this week. And then will the breakdown bar on the S&P fall? That's the other question. Again, if we pop over there on the weekly, can we get over the top of this? If we do, that almost always argues, right, that you're going to try to push farther. And in the S&P, that would mean you're going to go up and attack the swing point highs up here. These swing point high breakouts, if they take place, they're taking place over multiple time frames on multiple swing points, and that says if it does, right, this market's going to try to climb higher. And so any way you cut it, it's pretty positive out there the way things look. Economics next week, you got earnings. They're pretty much done. They're scattering until we get to the next earnings season in January, but so we're kind of in that lull as far as the economics. It's all front-end loaded. You're going to get second estimates on GDP, both here and in Europe. The main thing I think that people will focus on this week is the manufacturing data coming out around the world and the Fed reports here domestically. I think those are the ones that will move the market if we get any kind of movement. What's my bottom line here? Last week we were expecting those buyers to come in, and they did. Friday had set up as a sideways to lower bar, but Draghi just changed all that, and we spurted higher. If we're going to get a pullback, it's going to be Monday or Tuesday. If not, this thing's just going to gravitate higher because it's very favorably positioned that way on a seasonal basis. There's only 2 days of trading really this week, and if we're going to get that weakness, like I said, it's going to be Monday or Tuesday. And although there's nothing to say that a larger leg will develop to the top side, to have any chance of that to happen, right, the NASDAQ's going to have to join that NDX, and that's why I showed that as the key this week. If the NASDAQ does it, S&P probably going to do it. We already saw, over here that we've got 3 transitions now to sideways. That says that more than likely they're going to transition. If they're transitioning, those indexes are probably going to go higher. The one thing that we know, and it's been hugely negative, is all the money's concentrated in a few big cap names. It's been that way pretty much all year. It was kind of that way last year if you look back. And so you have a few names carrying most of the stocks. Most of the stocks have corrected. So if we do see rotation, right, this market can go higher. Those big caps could kind of, just sit there, and the rest of the market could gravitate toward the north. That, to me, is probably the key for any kind of sustained leg higher. Rotation. If we don't get rotation, I just don't see how the market can sustain a move to the top side. Last week we closed out, made some money on a couple trades. The drug sector, BMY, also on the BMW autos, took some profits there. On the other side, we added BAC, Bank of America added to it. The CPE trade, we added to that, and we added a new name with Baby in the medical space. If you look down here, and I'm not going to go through all of these because I think they're fairly clean right now. You've got very positive bias. Financials, these should benefit. KRE, BAC, Fiserv, FISV, all of these should benefit from a rate hike in mid-December. That rate hike probably is going to take place. I suspect financials are going to try to gravitate higher into that. And so there you just want to try to ride it. CPE did a secondary, held up really well. I suspect I'm going to upgrade this to a core position instead of just a trading position here at some point. I'd like to see it break out and improve that. IWM, we're just holding on the IWM. We really haven't done anything there. The ideal is, we're going to see some rotation. It's a seasonally positive time for the IWM. IWM is coming into the big bar, 117.14, got into it, tested it on Friday. Again, if we're going to see a pullback, it's going to come right away. This would be the one I'd be looking at first thing tomorrow. As far as what do you do in position? If the rest of the market's going to try to go higher, it's going to drag this one higher as well. So you just simply have to wait and allow it to try and do that. Gold space, man, gold just can't get going, and a lot of that, of course, is tied to the dollar. If I can pull up the gold here, I'll show you what I'm looking at. Looks to me like gold is really stuck. It traded up underneath the swing point low on a weekly basis last week, and I'm still trying to find it. Here it is. Traded up under the swing point low on a weekly basis and actually closed there. That's another, not transition. It's actually a reconfirmation on the downside, and that kind of kills the idea that you're going to get a nice big bounce immediately out of here. Can it still bounce? Yeah, it's probably going to do a retest regen immediately because it was a break on suspect volume. But then again, this space is so wiped out as a result of the dollar. When this space finally quits going down as the dollar goes up, that's going to be a big heads up. But so far, it hasn't been able to do that. So if we get any weakness, we'll look to add to the short side with the DGZ. Baby's a new one. Let's take a look at that one together. It's a very strong stock in the medical space. It had this nice big spike up, gravitates higher, gets a little pullback into the top of that bar, which is what we were trying to buy, right? And now it's just kind of hanging there. If you look at it on the weekly, it's at new highs. If you look at it on the monthly, it's at new highs. It's just a clean set of charts associated with this name. I like the way it looks. Fiserv, same thing. Nothing weak about Fiserv. CXO, now this has been an interesting name. We haven't been able to trade it very well because when we first got into it, if you remember, bought it back in this area, it just dove straight down and almost stopped us out. Got a nice big bounce up, right? Now it's kind of fading back. I still like this name, but again, these stocks are so hurt as a result of what's happening with the just trying to see if there's a top there, but it's not, as what's happening with the dollar, right, that they could trade lower and actually come back down here and test this low. So I'm going to look at this carefully this week. If we can't get some movement back to the upside, right, and do an ABCD structure this way, then we're going to have to abandon part of that position just to protect ourselves on the downside. I'd like to see it trade up, take some profits up here somewhere, and then, and the ideal was to take them right up into this area, and then, try to trade this back and forth because it's very volatile stock But we'll just, I think this week will be the week. We'll have to see how it plays out. On the currencies, or YCS, the EUO, just ride them. Don't worry about them. They're doing great. Just stay with them. Dollar strong. That means these are weak, and that's profitable. BAMXY, which is which is the auto manufacturer out of Germany, BMW. Nice push on it. We made some money on it finally. Finally took some profits. It's sitting right up here at the top. Had a failure on Friday, but it's sitting right at the top, and it just looks like this is the area that you have to take some profits. You're coming into the top of this big bar. That was 35.35. We got to 35.38. I suspect we're going to get some sort of a pullback here, and that'll allow us to buy some more as we trade around the primary position. And finally, let me look at ZLTQ with you. This one just dove on us. It broke multiple swing point lows. And here's the daily. It broke multiple swing point lows as it dove, and that caused it, to just push down hard on Thursday as it broke all these swing point lows. Now, the good thing is it only was on this time frame. It held on the weekly. The bad thing, it pushed volume on the weekly. So more than likely, this thing is going to come back and retest in this lower area. So we're going to have to watch this carefully, maybe take some profits, or actually take a small loss more than likely on part of the position in order to buy it down at a lower price point on a retest down lower. Finally, SBUC's looking on, as it always has, looking fine. Look at the sectors. A lot of strong sectors out here. I think if you're looking for opportunities to put some money to work and you didn't get enough on, that's the places. These are the places to look. So take a look at those sectors. Metals and energy, those are the ones that are still having problems. I'm trying to keep this a little bit shorter. I know it gets too long, so hopefully I can keep it to 20 minutes or less, make it more palatable for you to watch. So hopefully I can pack it all in there a little bit faster going forward. As far as everything else, if I can help you, let me know. And thanks again, as always. Only 5 more weeks to the end of the year. Usually favorable 5 weeks. Let's try to make some money on the way out. See you then. Bye.